All right, you're welcome to my QuickBooks channel. Now in this video I quickly want to show you how to do multiple currencies in QuickBooks Online. Although I already have a video on how to manage multiple currencies in QuickBooks Pro, Premier and Enterprise, and you can go check that out on the link in the description. But here I'm going to show you how to do how to manage multiple currency transactions in QuickBooks Online, and these are what I'm going to be discussing. First, I'm going to be sharing how to add exchange rates. First one, how to add your bank account, foreign bank account. Number two, how to add your foreign vendors, how to add your foreign customers, and that's very important. And then how to issue invoice in multiple currencies, and how to make payments in multiple currencies. And you're also going to see the effects of multiple currency transactions on your report. So we're going to be looking at exchange rate gain or loss. We're going to be looking at unrealized gain or loss. So let's start quickly. First, it's how to check your system if multiple currency is activated. By default, when you register an account with QuickBooks Online picks your IP to assign your home currency. So already our IP shows that we're in Nigeria, so we're going to see our home currency in Nigerian naira. So to check that out, you click the icon here, then that's this gear icon, and then you select account and settings. So we want to check if our account is currently set up to do multiple currencies, and if it's not, we can then activate multiple currencies in QuickBooks so that we can add more currencies and their exchange rate. By default, like I said in the QuickBooks desktop, if your home currency is in US dollar, euro or pounds, you do not need to add your exchange rate. System automatically downloads your rate online, so there's no need to do that. Now if your currency is in any other currency aside from this, your home currency is in another currency aside from these three currencies that I mentioned, it means you have to add your exchange rate. Though system automatically download, but because of the availability of multiple markets, for instance here in Nigeria we have the official rate, we have the black market, we have the bank rate, so you have different platforms with their relevant exchange rates, though they are closed. But it's very important for you to know which rates you're using, and at times when you make payments or you pay a foreign vendor or you issue an invoice to a foreign customer, there is a need for you to track the exchange rate as at when that invoice was issued or raised, and also the exchange rate when that invoice was paid, because there might be a difference and that could lead to a gain or loss. So all these are what we're going to discuss. So under the currency, you could see that our system is already set up to do multiple currencies, and if yours is not, you can always click this icon here. It will appear here in your own account, and then you can click and turn multiple currency on. So already multiple currency is on our system, so that's fine. The next stage is for us to check our bank account. Let's add our bank account, although I already have some foreign bank accounts here, so I'm going to show you how to add a bank account for the purpose of this training. So to add a bank account, you also click the gear icon, and then you come to your chart of account. Chart of account basically is an account that categorizes your transactions to either income, expenses, asset or liabilities. Everything you do in QuickBooks can either be an income transaction, expense transaction, asset transaction or liability transaction. So that's what chart of account is. But for the purpose of this, we are restricting it to our bank, just because we want to demonstrate how to do multiple currency transactions in QuickBooks. So here we want to add a foreign bank account. So the account type will be cash and cash equivalent. Detail type is account. Detail type is bank. Chart of account, it's very critical. Account type is very important when you are adding an account name. System won't recognize if I have a bank called assuming I have a foreign account with let's say Bank of America, for instance. Now this is Bank of America, for instance, and this account is operated in USD, so I need to select the currency. Now the important thing to note when adding your bank account, it is not the account name that the system uses to recognize that this is a bank account. What the system actually used to recognize the account name. It's the account type. So this is only a description. So if I select Bank of America, it does not automatically mean that every transaction that passes through this account name becomes a banking transaction. What is more important, it's the detail type and the account type. So if I select income and I see enter Bank of America, system will treat it as an income transaction. So your account type is very important when you're selecting or adding an account name, especially bank. The currency is also very key. If I leave it at Naira, system would also recognize this as a foreign account because I wrote Bank of America. It uses the currency to detect that this is the foreign account. So I need to set my foreign currency. So the foreign currency of this is Bank of America. Mind you, when we checked our settings to be sure that we are in home currency, we actually have that in Nigerian naira. So our foreign currency is in US dollar, and then your home currency in Nigerian naira. So every transaction you do will be reported in your home currency. So that's also very important. So our account balance, it's here. So assuming we have this, now you could see that system automatically downloads the rate online, 357.93. now here in Nigeria we have different rates, we have different markets, we have different platforms. So if I had bought this dollar at 360, so all I need to do is to enter my rate. So it's flexible, so I can always update my rates here. So here you've changed the exchange rate of the USD for this. Would you like QuickBooks to save this new exchange rate only for each or for all transactions in March? So this also happens if you want to apply this 360 to all your transactions, or you only want to use it for this particular account. So sometimes I would select only. It all depends on you. I might say make this 360 my exchange rate for the day. So that's, I will then click OK. So all the dollar transactions are going to be at this rate, or it could be for just this account only. Then I'll click save and close. So but if I want to add a new account, I can then click save and new. So it's not limited to the dollars. You can add your euro, you can add your pound, you can add the Chinese yen. So you can add any currency at all, as long as you have activated multiple exchange rate. The options are not limited. So here we have our foreign account added, so we could go on to add more accounts, chart of account, cash and cash equivalent. Then I can add another account here. So I could just call this Polaris Bank, and this is going to be euro account. So then my currency is going to be in euro, and then I'm also going to enter my account balance here that I have 1,000 euro, and this is the rate downloaded online. Then I can also update my rate. So if I want to work with this, fine. So you could just click save and close. So that's the second stage. The first is to check if your account is already activated to do multiple currency. The second is to add your bank account. Why do you add your bank account in USD? It's very important. You can only pay a foreign vendor from a foreign vendor in a currency that is the same or that correspond with the paying bank. For instance, if I want to pay a foreign vendor, I cannot pay a foreign vendor from a Naira account. It has to be from a dollar account. That's how it's done here in Nigeria. So I think in your own end, if that same thing should also apply. So a foreign, you can only pay an account or a vendor in a currency that is also the same thing as the bank from where the money is coming from. So that's one. So we've added our bank account, which is also very important. So the next thing is, how do you update your exchange rate? If you want to update your exchange rate on a daily basis, you also click this gear icon, and then you see currencies. When you see click currencies, it will show you a list of all the currencies you have on the system, and I can add more currency. These are my exchanges, so you can edit your exchange rate. So exchange rate here, it's not final. You can add yours if you want. So if I click edit currency, so with this I can update my exchange rates. So you can see this is market rate. This market rate was downloaded online, so you can click your own rates. So if you have another rate that is different from the market rate, I can as well adjust this and then click save and close. Now this is available. This is very important for us here because our exchange rates here in Nigeria, we have different exchange rates here in Nigeria, so it's important for you to always use the rates that actually prevail at the point of that transaction, not what the official rate is, because you may not necessarily get your currency from the Central Bank of Nigeria. So you may actually buy your currency from a bureau de change. That's the registered platform or registered dealers of foreign currencies here in Nigeria. So this is how to add. If I want to add more currencies, I'll then click add currency. So under add currency, I have the option of selecting more currencies here. Then if you select more currencies, you can then update the rates like I said. So this will help you to add more currency. Now when you do that, the next thing is for you to add all your foreign vendors and your foreign customer. Now when you add your foreign vendor, the only thing that will make them to be recognized as a foreign vendor in the system isn't the name of the vendor, but also currency, just like the way we differentiated our local bank account from our foreign bank account using the currency. So to add your foreign vendor, you go to customers under the sales section, and then you select add new customer. So when you add your new customer, you enter the name of your customer, enter any relevant information about that customer, and ensure that you select the currency with which the customer pay you. So this is very important. If you select the currency in Naira, it assumes that the customer pays you in Naira. So and whenever you want to issue an invoice to that customer, system will treat that as a Naira transaction. So be very vigilant and be very careful when you want to add your foreign customer. So if I have a foreign customer, for instance, called let's say we have Google Oil and Gas, this is a foreign customer. So you go to payments and billing and ensure that this customer pay you in US dollar. So you come to this customer pays me with, you select. So this is what makes that customer a foreign customer, not because of the name. So this is what makes them. The advantage is that whenever I want to issue an invoice to this particular customer, system treat it as a foreign transaction. Then I'll click save and close. So that is also very important. So this is it. This is Google Oil and Gas, which is a foreign customer. Now if I also want to add a foreign vendor, the same thing also applies. I'll go to my supplier or vendor. Now what differentiates a local vendor from a foreign vendor? It's also the currency. So anytime you activate multiple currency in your account in QuickBooks Online, ensure that you're always vigilant when you do when you want to set up anything that relates to a foreign customer, foreign client, foreign vendor, bank account and all that. So that is very important, because when you get your setup right at the beginning, everything is automatically fixed. That's why it's important for you to take your time to get things right from the beginning. You need to get your currency right, you need to get your home currency right, you need to get your bank account set up right, you need to get your customer right and your supplier. If all these are done, the rest are very, very simple. So here we have our foreign customer. So let's assume we have CAT, for instance, as a foreign vendor. I mean, now like I told you before, you need to select the currency. This is what makes that vendor a foreign vendor, the currency you select, meaning that anytime you enter a bill in the name of that vendor, system treats it as a foreign transaction. So we have this already stated. So we already added our customer, although we have some on the system. I just demonstrated this to see, so that you can see how to add a foreign vendor. So the next thing is to move to the transaction properly. Now you go to sales and then you select all sales. Now when you sell to a foreign vendor, it could be by cash or or by credit. Now by credit means that you sold to them but they are yet to pay you, so it's like payment was postponed to a future date. And to record such credit transaction, we use an invoice. So invoice is used for a credit transaction and sales receipt is used for a cash transaction. So note that invoice is used for a credit transaction and sales receipt is used for a cash transaction. So now we want to issue a foreign invoice to a foreign customer. So now what is also very vital about foreign invoice is that you don't have to the workload in creating an invoice for a foreign customer has been reduced already. So just the way you do your normal invoicing and all that, the major setup there is to ensure that the customer is actually added with its own currency, so which we did when we were setting up. So for Google Oil and Gas, the moment you select Google Oil and Gas, system treats this as a foreign invoice. You could see how this changed from Naira to USD the moment you select it. So that's also very important. Now we want to select our service. So let's assume that we render a service. So we oil and gas staff training. We trained some Google staff on oil and gas, for instance, and then we charged them 3,000. Sorry, I will charge $3,400. Let's say it's for let's say it's for 3 staff. So this is a typical. Okay, so this is it. Now if this particular invoice is vatable, we have our VAT here too. Now, and if this invoice is related to a particular class or location, let's say you want to track all foreign transactions separately, you can also select it. So you can add new, then you could call this US. Excuse me. So class lets you add track your transactions by different locations or departments. So we have a department called New York US. That's a department that track all our foreign services and all that. So this is a typical example of how to add your foreign transaction. Now, when this invoice was raised, $1 was equal to 360 naira. So then you review your transaction, everything is correct, and then you click save and close. So we've saved this invoice, and so automatically this invoice alright, so this invoice have been saved. So save and close. So fine, so invoice saved. So you click. So we've saved our invoice. Now this is a foreign transaction. Now we want to receive a payment from that client, from Google Oil and Gas. So to receive your payment, either you come to all sale or you go to customers and all that. So you locate that customer. So you can see this is the outstanding balance, 10,710 USD. This transaction will be reported in naira because your home currency is in naira. Let's confirm that. If you go to your reports, and under reports you search receivable. So receivable, customer balance summary, so you can see Google Oil and Gas is reported in naira. This is Google Oil and Gas reported in naira, so that's fine. So let's go back to our dashboard to receive payments. Now with foreign exchange transaction, it's likely that the exchange rate at the point of issuing that invoice may be different from the exchange rate at the point of settlement. So that's also another importance of tracking multiple currency. You're looking at the effects of that movement on your business. That movement can actually lead to a gain or loss. Now we issue this invoice at 360. By the time we receive the payment, if exchange rate reduces or falls to 350, it means we've made a loss of 10. But if it increases to 370, that means we made a profit of that same 10. So the effect of exchange rate on your business, it's also very, very important. You need to track that, because a lot of businesses are making profit but not knowing that that profit is being eaten by exchange rate loss. So you need to take care of that, so that whatever the system tells you it's your profit, you could probably say, wow, that's exactly what I earned, because I've been able to take all necessary I've taken into consideration all relevant factors apart from my normal local transaction, and I also looked at the foreign exchange side of my business. So here we want to receive payment from Google, and Google is also paying us that same amount, but the difference now is that Google is paying us when exchange rate is now 375. So ordinarily we're supposed to receive 10,710, which is also the same thing. But when we convert this to naira, or the value of that conversion is going to increase. It's going to be higher than what it was as at the point where the invoice was created. So the difference is what we call exchange rate gain or loss. So let me take my time to explain exchange rate gain or loss. Exchange rate gain or loss arises as a result of movement in the differences between the time the transaction occurred and when it was settled. So for an invoice, the transaction occurred when you issue that invoice, and then for a purchase, the transaction occurred when you entered a bill. So if you're issuing an invoice to a client, the difference between the exchange rates as at the point of that transaction to when it was settled, it could be higher or lower, lead to exchange rate gain or loss. For a vendor, the exchange rate between when you receive a bill and also when you pay that bill will also lead to exchange rate gain or loss. Exchange rate gain or loss is different from unrealized gain or loss. Unrealized gain or loss, it's a movement in your account balances, so it's unrealized. You haven't realized it yet. For instance, when I opened my account, I have $1,000, and then $1 equals to 360 naira. So if I have to convert that money, I'm going to have 360,000 naira. Now if exchange rate increases to 370, then I'm going to have what, 370,000 naira. That's that difference of 10,000. We call it unrealized because you are yet to realize it. It's still there, so it's still unrealized because it's subject to exchange rate movement. It could change at any time. You have no, it's more or less like a paper profit. You haven't realized it, but the moment you withdraw that money from the bank and you have it as cash with you, it becomes realized. So unrealized is tailored to your bank account, your bank transaction, your bank account balances. It changes on a daily basis as you update your exchange rate. So but unrealized your exchange rate gain or loss, it's transaction related, point of occurrence to when it was settled. So that's the difference. Now save and close. Then I can only receive this in a foreign account. So let's receive this in a foreign account, and then Bank of America. So the money was paid into Bank of America. Then I'll click save and close. Mind you, we settled this transaction at a higher rate of 375. So in our P&L, we should have an exchange rate gain. So I'll click save and close now. So then to confirm that, we go to profits, so we go to reports. Then let's check our profit or loss account if we are going to see anything like exchange rate gain or loss, because there seems to be a gain on the invoices that we entered earlier and the settlement. So you can see now exchange rate gain or loss. You could see, so our profit was 42,9440. now with this particular one here, yes, it increased it. Yes, it increased it. So you can see here, so minus will give you plus and all that. So you can see, unrealized gain or loss, this is 0. So you can see unrealized gain or loss is different from exchange rate gain or loss. This actually is tailored to your bank, as your bank balances is going up, coming down, as your exchange rate also increases or probably fall. You see how it reflects in unrealized gain or loss. Then this is between when transaction occurred, either an invoice or a bill, and when it was settled. So that's fine. Now let's move over to the next one. The next one is a bill too. Assuming we received a bill from a foreign vendor, it can either be a local bill, it can either be a bill that was settled immediately or at a later date. Now why I'm not looking at instant transaction is that it's not likely going to be anything like exchange rate gain or loss for a cash transaction, because we paid immediately. So exchange rate gain or loss arises when there's difference between when that transaction occurred and when it was settled, and that probably is only directly related to a credit transaction, because credit transaction is basically it's transaction occur twice. The first one is when you actually entered into that agreement, which is when you issue that invoice or when you receive the bill. The second one, it's when you probably settled. So it's a two-way transaction. So within that time when the transaction occurred and when you settled, that's likely going to be a fluctuation unless you already have an agreed exchange rate settlement. Do you understand? So that's where exchange rate gain or loss. Some sellers or buyers, they enter into agreement, they enter an agreement, or they have an agreed exchange rate, probably for the seller to probably hedge against loss, and also the buyer to hedge against loss. So what they do is that we are going to settle at this particular rate, so whether it goes up or it comes down, this is our rate. So they do it to probably hedge against exchange rates. So now let's move on to bill. When you go to your expenses, so under this you're also going to enter a bill. Now when you enter a bill, it means you have enjoyed that service from that foreign vendor, but you are yet to pay. So there's also going to be exchange rate gain or loss, meaning that if you receive a bill at a higher rate and you settle at a lower rate, it's a profit for you. But if you receive a bill at a lower rate and you settle at a higher rate, it's a loss. So it's just like an inverse of that invoice. So we have Cat sent us a bill, and that bill basically, it's let's just look for something. Let's say equipment rental, and their bill is in US dollar. So and then this is the bill, 1,000. So when we receive this bill to excuse me, our exchange rate too was 360. So let's assume our exchange rate of 365, and then we have, so you can use, so why this always pop up is it's asking if you want to use this rate for that day, or you only want to apply it to just this transaction. So that's why you have this. So the normal way you enter a bill, then you click save and close. So it's alerting us about the class. So let's also select the New York too, then you click save and close. Now we have received this bill. Now we want to pay that bill, we want to settle that bill. To pay that bill, you come to pay bills. Pay bills will show you list of all your bills that are all your bills, or list of expenses that you're yet to pay. So now we have this. Now when you go to pay bill, the first thing you see is you see all the bills in your local currency. You can then change the currency to check the bills that are in USD. So but if you go to your account payable, it reports all bill in home currency. So this is the bill we want to settle. Initially we enter this bill at 365. Now we want to settle at a lower rate of 350. This is also going to lead to exchange rate gain. So let's assume that we are settling at 372. So and we are paying $1,000. We are settling everything. So now we see ordinarily the first time it was 365. So convert to naira should be 365,000 naira. So and we are paying this from a foreign bank account, which is also a foreign bank account. So we have our foreign bank account here, $1,000 US. Yeah. So the equivalent of this is going to be 370,000 naira. So we have this. So this is going to lead to exchange rate loss. Why? Because at the point of entering this bill, it was at 365, and the point of settlement is what, 370. So we click save and close. So when you click save and close, let's go back to our reports. If you go back to your reports, profit or loss, so you see we have now. So if you double click on this figure, it will show you the history of that exchange rate gain or loss. You can see from here, this is a profit, this is a loss. So we have a profit on Google transaction, Google Oil and Gas as a client, then we made a loss on CAT as a product supplier or a service provider. So that's a summary of how to track your exchange rate gain or loss. So this is fine, this is cool. Now if I want to update my exchange rate. So let's also check unrealized gain or loss. So assuming I update my exchange rate for the day, currency, and I update the rate to 370. So you could see 360 is still the rate. Why the 360 is the rate for the day? So ordinarily your unrealized gain will still be 0, because all the ones we've done so far are related to that transaction. But already we can assume that our exchange rate will always be 360. So let's take our exchange rate to 370. So this is where you update your exchange rate on a daily basis. But when I say on a daily basis, it does not automatically mean every day. It means when there is a need, when there is foreign transaction. So we have updated it to 370. So I believe unrealized gain or loss now should reflect what the exchange rate is now. So for increasing it, I believe we should have an unrealized gain, because our rate has increased from 360 to 365. So if you convert the USD you have in Bank of America to Naira, you should see what it is. Okay, unrealized, I think okay, this is Bank of America account balance. Fine, so let's check reports. So you could see this is already at this our account. So you could see that all your foreign transactions are also reported in home currency, even your receivable in dollars. So you have a receivable in Naira, then you have the one in dollar. So I believe this video would is enough to help you get started in managing multiple currency in QuickBooks. Feel free to subscribe to my channel, share your comments, ask questions. I'm always here to help us become better, get our business book right, and then always subscribe. Like I said, subscribe to my blog and then follow all our conversations here, because I'm always open, and sometimes your questions too can also help me create more videos which could also be relevant for other subscribers. So thank you, and you have a blissful day.